Hello, I'm Liz Lumley of Finextra, and we're here at EBA Day in Helsinki. And today I'm speaking to Goerlach of Deutsche Bank. And we're going to talk about intraday liquidity and risk management. So I'm going to ask you two questions. And one of it is, I've been talking to a few people in the industry, and there seems to be a bit of confusion about what the upcoming Basel III reforms have to say about intraday liquidity. So I was wondering whether you could clear that up for me a bit.
Yes, so basically the way Basel works is that the Basel Committee issues regulation proposals, so they issue paper. And the way it worked in the past was that after they issued some paper, they got bundled together and were referred to as the Basel. And then the committee issued more paper, and at some point in time they were bundled together and they were called Basel II. And then obviously at some point in time we had Basel III, which is also a set of papers. Right after basically Basel III was bundled, this paper on intraday liquidity had been issued. There is no Basel 3.5 or Basel IV at the moment, so some people still take this paper and refer to it as Basel III, whereas I think technically it does not belong to Basel III. However, there is a relation to it, and that is in Basel and Basel II, only the capital side was regulated. Basel III for the first time introduced liquidity regulation. In Basel III, the longer term liquidity risk and the shorter term liquidity risk is addressed with the NSFR and the LCR regulation. What is not addressed there, and which is now captured or start to getting captured in this new paper, is the very, very short term risk, which is the intraday. So it's in line, but the bundling of Basel III had been done before this paper was issued. I think that is kind of the relationship.
Okay, so it's sort of a subset of the original Basel III papers. So, one of the topics that's come up a lot at this year's EBA Day is for banks really to focus on the customer. And I've been to other conferences where people talk about regulations, and their comment is, when regulations get put together, do they ever think of the customer when these are being put forth? So when looking at intraday liquidity and risk management, what impact is this going to have on the customer side of the business?
That is the key question. So when you look at this topic and you see the reason for change, you could say you do this for the regulators. But in reality, you also do it for the clients. And the feedback that we got from clients also here yesterday on the EBA Day on the panel is that there is a real need for clients for intraday information of their liquidity. And the reason for that is not only for risk purposes, but also it helps clients, especially corporate clients, to get more efficient with their liquidity, which is a real saving for them. So it's not only a regulatory driven topic, but there's also real client need.
Excellent. Okay, so and during your panel, this conversation about the client came up often with the group that you moderated then?
Yes, so we had a very good panel session there, and we had Jukka, actually a treasurer from a corporate, who could express what the actual needs are. And the other elements that we discussed there is also from a technology perspective. All the data, all the intraday data is in the banks today. It's just that the systems for historical reasons are designed to look at end of day or in like a batch at the end of the day. So we need to be more intelligent going forward on how we organize the data and how we make it available to the client. And that's basically all of the trick, and allows then the clients, treasurers, to be more efficient with their liquidity.